Hello and welcome to Getting Hammered, the podcast where we go behind the scenes of the Scottish property investing market and tell you everything auction. I am John Morris, owner of Prime Property Auctions and Scotland's favourite auction house.
And I'm Lewis Goreen, also owner of Prime Property Auctions, and in the spirit of being transparent, we have decided to start a limited series podcast to answer some of the most common questions we're asked about auctions. And today's focus is how do people finance auction purchases and what creative strategies are out there?
Yes, today we're going to talk about funding properties that you purchase at auction. Obviously, we deal with cash buyers. However, we understand that not everyone has hundreds of thousands of pounds in the bank and they do require lending. So we're going to talk about bridging finance. We're going to talk about just buy-to-let mortgages. And we're going to get none other than Ewan Dudding on to explain everything finance, how he has built his portfolio and how you can use the strategies that he has.
Got to say he's the king of sterling.
Oh, yeah, well, he is the king of sterling. Well, actually, he's going to be, he's buying in Glasgow now as well. So,
King of everything.
King of Scotland, I think.
Me and Ewan used to, try and deal source back in the day, 2017, I think it was. So I'm excited to see him as our first guest on this podcast. And the reason we want to bring him on is to highlight that you can finance auction purchases in other ways, not just cash. And to reiterate, this is something we only recommend for people offering outside of the auction itself, because in the live auction, it's a lot more strict. So this is for pre-auction purchases where you can finance stuff creatively.
Exactly. If you are, we've covered this in previous podcasts, when you're making offers outside the auction, you do have greater control on what you can negotiate. You can negotiate longer time periods, lesser deposits, everything like that. And especially if you're going to be getting lending, then potentially having a couple extra weeks just to make sure you're going to get the finance is going to help. So we are going to discuss what we do. If you say the word deal, by the way, Ewan, you have to do a shot of
whiskey.
It was whiskey, but because I'm still on a diet and looking trim for it, we're not getting hammered, unfortunately. So we're doing shots of ginger shots. So if you say the word deal or anybody else does, then you've got to take a shot of that.
You're not allergic to ginger, are you?
Not allergic to ginger, no.
Good.
Yeah, I also don't drink often, so I'm quite glad you're on a diet.
Perfect. Right, Ewan, well, let's just give people, because you've been on a lot of podcasts, people listening to this will know you for sure. How did you get into mortgages specifically? How did you get into finance?
Yeah, so after university, I was always interested in property, also interested in finance. I decided to do a bunch of exams and join an IFA. But after that, I bought about 20 properties and I was probably more interested in mortgage rates and swap rates and property in general rather than the stock market. So I thought I'd kind of use my experience and skills and knowledge and interest in kind of financial services and then retrain to be a mortgage broker. By that point, I'd obviously built experience buying several flats, so I was able to kind of see things from both sides. And instead of submitting pension applications, I've submitted mortgage applications.
Yeah, so you're actually doing it, and now you're buying stuff yourself, and then you're doing it for other people. So it's quite an easy transition because you kind of understand.
Yeah. And it was a sphere that I was most interested in. Obviously I've built the portfolio as well, but I'm very far removed from that.
Yep.
I don't deal with tenants. I don't even deal with letting agents too much. They kind of run the show themselves. I'm never on site. We did about 80 refurbs last year. I didn't think I visited any of them, so the side that I was used to was dealing with lawyers, dealing with the finance, and that's the side that was interesting to me.
Yeah. And what was your first mortgage? Did you go down the bridging route from the start, or did you just get a buy-to-let mortgage? Tell us about that.
Yeah, so the first ever, I got a residential mortgage while I was a student, based off my income working. Even though as a student, I just worked lots of hours, so I was able to get a mortgage. After that, I was actually scared of bridging, ironically. I didn't like spending money. I probably lived off about £700 a month, so I certainly didn't want to pay £700 a month in bridging. So what I then did is sacrifice 3 years of my life to save up enough money to buy cash. So I got to about £80,000, and that allowed me to buy cash and then remortgage straight away, which was key.
How many? So you bought a flat, and did you rent out just one of the rooms?
No, I rented out 2 rooms and then also half my bed to my missus.
It's funny that as well, because my first property, I rented out a room. Your first property, you rented out a room, and everyone says it's like, if you're going to buy investment properties, you need to get your bridging finance. You need to go home and get BRRs. Yeah. When actually, if you just buy somewhere, get some income from it, it's a good way to
sure.
find out the process and just go. You don't have to go for these crazy strategies straight off the bat.
Yeah, I mean, if I'll start again, I'd go get like a 5-bed, 6-bed house somewhere that's near a kind of inner city, you know, and where there's demand, and then just rent all the rooms, you know.
Be a good strategy.
How many units are you at now?
Property wise, obviously it's all ever changing, but I think about 178.
Wow, fucking hell.
178, and in the mortgage business,
Yep.
how many mortgages are you doing on a monthly basis?
Great question. I think so far, I should have given you my numbers actually. I think so far this year, I think we've done roughly about 350.
We're at
so
the end of
far.
March just now.
Yeah. So maybe over 100 a month. That I think that's fully submitted. I think, yeah.
And how many of
I would honestly
those
need to check
are auction purchases?
Yeah, good question. So most of the auction ones are bridging, as opposed to term mortgages. I would say we probably, at least anecdotally, probably do maybe 3 to 4 bridging applications a week. That's auction purchases.
Is that right?
Yep.
Can you explain to us, if someone that comes to you and say, if I've purchased a property at auction, what was the main difference in your head as a finance broker saying,
Yeah.
okay, well, what are we going to do? And
Yeah, so the first thing I always do is just make sure, especially if it's a newer client or a less experienced client, is make sure the lawyers have checked the legal pack. The next thing I do, I tell them, like, look, we need to get everything done our side very, very fast. So I need all your documents straight away. Even if you think you're going to offer on it, just send everything over so we're then ready to basically submit the business. And then I suppose the next stage would be selecting a lender. Typically, we try to get an online valuation. The reason being, it just saves waiting 2 weeks for a survey. So if that's the case, we could feasibly have something in legals within 24 hours. And then that gives the solicitors plenty of time to settle the transaction. So today, on the way here, actually, a client just agreed something at auction, and it's the same thing. I was like, look, get us the documents back over the weekend. We'll have it in first thing Monday, and it'll be over to your solicitor.
What would you say is the biggest mistake people make when they buy?
Specifically at auction or elsewhere?
Auction, let's
At
say.
auction. I think they've probably just not checked the legal pack or missed something, I would say, that's maybe there. Sometimes they're a little bit, for example, I mean, some clients may want a bridge based off the market value, which typically means that you're borrowing a lot more money, but it does mean you're going to get a physical survey. So I've had issues there actually getting access. You know, so sometimes we need to say to them, like, 75%, I can pretty much guarantee you get the money, but if you're wanting 90% or more, then
Of market value.
of purchase price, but
Right.
you struggle to guarantee that, you know. See, in the conversation I had yesterday, I was like, right, we can try to get the 90, we can do everything as fast as we can, but I just wouldn't be 100% confident of getting it. But if we've, say, got an online value and we can do everything within 24 hours,
Yep.
if I give a solicitor 4 weeks to settle a transaction, as far as I'm concerned, it's their fault if it doesn't go through.
And do you have trouble? I mean, obviously, when solicitors are seen to be the anti-sales because they're always trying to throw things up to almost stop sales. Do you find that in your part of the business as well?
Yeah, for sure. Especially when a lot of bridging lenders use separate representation, which is obviously quite a key thing for using bridging. So that basically means when a solicitor asks for the lender as well, and they've got kind of prerequisite questions, they've got certain checks they need to make, and obviously if the borrower's solicitor is not necessarily that experienced with it, they can really struggle. And often you are getting dealt with stupid questions, and you're kind of wondering, like, why are you asking that? And sometimes you need to make that point.
Yeah.
And sometimes you need to kick up a fuss, and I suppose that's the job of a broker. It's not just a case of getting all fully approved in legals. You do need to kind of follow it through to completion.
Just so people understand how a typical auction purchase would work finance-wise, what would you say is like the typical auction purchase using some form of finance? How is
Yeah.
it structured?
Typical one for us is usually cheaper properties. It might be kind of 3,999, might be 40, 50, 60,000 pound. Typically, I'm guessing if they're buying at auction, it might need some sort of work. Maybe there's a small discount. So clients are typically, 1, bridging for speed, but 2, bridging because it suits the type of deal. Obviously, if clients particularly don't want to bridge, then that's when it's having a conversation and asking the auction company if it can get, 56-day completion.
Obviously, we talk about bridging quite a few times. Just for the layman out there, somebody who's just clicked on this podcast and is not sure, can you just give us the distinction between a bridging loan and a mortgage?
Yeah, so I mean, effectively they are the same thing. Secondly, it's a secure loan for a business to buy a property. They secure it, like first charge security against the property. The main differences in my head would be the length of term and also the flexibility. So typically a bridge will be, say, a 12-month term as opposed to a mortgage, which might be 25 years. But you can exit that term at any time. So there is a lot more flexibility there. And effectively, it's a short-term funding solution to allow you to bring a property from one stage to the other, which is almost like a bridge, which is in the name. So, for example, it's suitable for, say, uninhabitable properties, something where you're buying at a lot of discount. Mortgage lenders wouldn't typically lend against that. So you're able to buy at a price with that loan and then refinance to the higher value or sell. And then obviously once the sale proceeds or the refinance comes in, that repays the bridging loan. And then typically after that, you're onto a mortgage, which maybe has a 25-year term.
What's the typical term? 6 months, 12 months,
Typical
18
term
months?
for a bridging loan is 12 months.
Okay.
We always do take that because there's not really any downside typically of not taking that. But you can come out any time, which is obviously really important because bridging can be expensive. I suppose in terms of a mortgage, you might be saying paying, I don't know, roughly maybe 5-6% per annum. With a bridge, that's probably more like 12. But if you're able to get off of the bridge sooner, i.e. after 2 or 3 months, it becomes a lot more kind of amenable.
People are buying on a bridge, doing some form of value add like refurbing, and then they're refinancing onto a term loan, which is a mortgage. And how long does that usually take? So just so people maybe get an idea of how long they should aim for a completion for the bridge, what would you say is a safe amount of time in under auction terms to agree a completion time to organise a bridging loan?
So if someone agrees at auction, what's
like how long they should probably agree for the completion date?
They're trying to buy it out with the auction.
Out with, right, okay.
Yeah.
I mean, look, if the longer you can get, the better, but I do think 4 weeks is reasonable. If it needs a physical value, I would be asking for 6 weeks or more. Yeah.
And that's something always we try and do if someone is buying out with the auction, we ask, look, how are you funding this? And they're going to get a bridge.
Yeah.
We'll always speak to the seller and say, look, they're getting a bridging loan. Can we get 6 weeks? Because it's like you might be able to complete in 4.
Yes.
But let's
Just have
give
the
it a
flexibility,
little bit of flexibility.
4 weeks is a time scale that if everyone does their job and does it the same day or within the next day, 4 weeks is plenty of time. Don't get me wrong, the quickest bridge we've done is 2 days, but that's like a complete anomaly. We've done probably a dozen that's at a week, but again, there's a huge amount of resource. That's like huge resource from the lender side, the broker side, the client side, and the solicitor side. So you can't do that all the time.
Yeah.
But if there's some sort of emergency, obviously exceptions can be made.
What would you say facilitated a bridge being organised that quickly? What was in place?
Yeah, good question. So, one, it's about using the correct lenders, but the second thing as well is knowing exactly what those lenders want. So, for example, it's almost like a shopping list. If you know the lender wants 35 things, you give them the 35 things up front. Maybe you add a few extra things as well, and that's when it comes down to what you would call in the mortgage world packaging. So that means the lender's got so much stuff there from an underwriting point of view, they're happy to instruct it almost immediately.
Enough. And obviously, we have an auction house. We tend to deal with properties that are uninhabitable, unmortgageable. And this is, I mean, we see it when we get home reports back, and it's like, if it's a certain type of construction, and the surveyors are just like, oh, you cannot get a mortgage on this. When we speak to people, it's like, well, you will be able to get lending. It's just maybe it's restricted.
Yep.
So, how many specialist lenders are you dealing with that are dealing with these unmortgageable type of properties, or would that always be a bridge?
Good question. I mean, that's a big grey area. I mean, it's hard to talk specifically there because each property type, etc., does differ. But you always will get the lending. The main thing is obviously the interest rate and the loan to value. Maybe you take a 65% instead of 75%. Maybe you're on a higher interest rate. But again, it's always about speaking to a mortgage broker at the outset because it's easy to get the bridge going into it, totally fine, but you need to make sure you can get off the bridge. And that's where we see a lot of issues where people have been sold deals, people buy deals, and effectively it's fine because they can get into it, but getting off of it is a different story.
Oh, did you say deal?
I said deal.
You said deal.
Oh, he said deal. There's only 7. There's only 7 shots in this.
It's the healthiest thing I've had all week. Just been living off Indians.
Yeah, you love a curry, don't you? All your curry nights.
There's nothing else here.
Yeah, it's true.
Yeah.
Yeah, I've heard you say Dubai's so much better for food options.
It's the main thing, to be honest.
And it's always so convenient. Maybe we should buy it out.
Cheap as well.
See what it's like.
You know what I mean? Went to Vienna, it's like you're paying 20% more in Dubai and it's shit.
Yeah.
Do you know what I mean?
Well, maybe once
It does spoil you, though. Do you know what I mean? You go to Vienna and you're like, oh, this is dead.
we need to try and go to Dubai. Was that not
You're having a shot as well. You're not exempt to this.
calories though?
I feel better already. I need to keep saying deal here.
Fuck you. Something I hear a lot of or about is AVMs. When I speak to investors, they say, let me go get an AVM from you. And I'm like, what is an AVM?
Yep. So an AVM is effectively an online valuation through some sort of software that either a specific lender uses or a third-party company. So the most common ones would be, for example, Shawbrook, because most stuff does qualify for an online value with Shawbrook. So effectively, they would give the little figure that it would lend against. And then the other main one is HomeTrack.
Okay.
And HomeTrack, I suppose multiple people will use, but the main one is Together. Use that HomeTrack report, and that does give you comparables and stuff as well. So that is a good thing.
And so you can pull this up and find out what something is going to. So that's market value in top end condition.
So it gives you an average.
Okay.
So obviously it's common sense, but common sense isn't always common. If your flat if your flat's a shithole, then it's basically going to be a slightly higher potentially because it doesn't account for the condition.
Yeah.
Equally, if it's great inside, it might be slightly lower. But what it does is it gives you a range. For example, 100,000 to 130, and it might give you an average of 115. But it's also got all the sold comparables below. It takes data from the last known valuation done, and it's also got square meter addresses and stuff. So even if I'm buying something myself and I'm not 100% sure on the area, I'll run some AVMs.
Right. And is that what they would lend based on?
For Together specifically, yes.
And they don't need to go and do a physical valuation.
Exactly,
They
yeah.
can blend off of that.
Yeah.
Will they ask for any photographs or videos or?
If they've got an inclination that it's absolutely gubbed, they might ask, but generally speaking, there's no photos, there's no videos. The only time there might be photos or videos might be if you're refinancing onto that and maybe potentially the values increase quite a lot. Obviously, they want to verify that. But on the purchase, typically not, especially for bridging.
Can anyone just get an AVM themselves, or is it just brokers that have access to certain software?
So in terms of lenders, it would just be brokers because effectively it's a lender system.
Does it cost you to do that?
So with the lenders, it costs us with time because effectively it's on the application. So we'll have dummy applications where you need to then put the details in to get it.
Right, okay.
It's a pain in the arse, to be honest, because you're getting, you get 3-4 of your staff members and yourself just running AVMs for free all day. But I do understand the value in it because I do it myself. In terms of HomeTrack, I think anyone could probably get access to HomeTrack, I'm guessing.
Is it a free software?
It costs £35 a report for HomeTrack.
Okay.
Yeah, so we just charge it out of cost. The Shawbrook one is free because it's part of the application.
Cool. So you pay for HomeTrack, anyone can do it, and otherwise what was the other one called?
It's just one of the lenders, Shawbrook.
Shawbrook
Yeah, yeah.
Together, right?
Together use HomeTrack.
Oh, do they? Right.
When were they introduced? Because I mean, it was especially over the last year. It's especially in sourcers chats. It does seem to be that the AVM value is this. It's like I'm selling it at 65 grand, but the AVM value is 130,000.
I think they've been around for quite a few years.
Okay.
I would say probably maybe 4 years or so at least. I think now it's obviously just a spread of information, right? People talking and people start getting a knack for it and obviously see value in it.
Yeah. So I suppose at which point,
Especially the Shawbrook ones, because you can borrow money off the Shawbrook ones at sensible rates. So for example, I had 17 houses that came from a letting agent I know. I didn't really know the area, but we were able to run AVMs on all of them. And you had every single figure right there. So a buyer's one got a reference point, but two got an actual figure they can borrow against.
I suppose if there's activity in the market as well, and they can say, look at all these comparables, then it's like we have the information. We know
Plus
we can lend
it's
out.
certainty as well. They know they can borrow against
Is that
figure.
certain? Like, is there a confidence level they give you?
So there is confidence levels for both of them. Yeah, with the HomeTrack report, it's clear on the report. With the Shawbrook one, it's not so clear, but they'll tell you most stuff has a fair confidence level. Most.
Is it usually pretty bang on what they would lend on? If it says it's worth 100, or they'd lend 100.
So they've got certain rules do change, by the way, but the figure they always lend on, but depending on the confidence value, they might ask for a physical valuation. So they might do a confidence to say 4 or something like that. And if it's below, they'll ask for a physical. You can maybe get it on exception if it's between 3 and 4 and maybe 65% loan to value.
Okay, so that's sort of finance, but you're obviously doing a heap of I'm not going to say the D word, opportunities. You're buying opportunities.
Opportunities, yeah.
Where is it you're getting these opportunities, Ewan?
I suppose it's just from estate agents, letting agents, property sourcers, other investors, you know,
Auction.
surveyors, auction.
What
Yeah.
What makes someone give you deals?
Um,
Fuck, sorry. It's impossible. It's impossible.
You need a top up, Ewan?
Tea break.
Why not? It's about 2 weeks worth.
This game would have been so much more fun if it was booze.
Shots are nice today.
Yeah, they're not as spicy as usual.
I had a week where it was like.
Or do you reckon we've just become accustomed because we've had to tan a bottle of this every week for the
Honestly.
past 5 weeks?
So for investors that want to get access to opportunities, what would you advise them to do?
I would be very, very specific, you know, because everyone's wanting deals.
Oh,
Fuck's sake. Everyone's wanting properties to buy.
yeah.
You know, so if you're just Joe Blogs off the street like everyone else, but if you're very specific, for example, I want a property in Kenning Park where we are today, a 2-bedroom flat, roughly about £100,000. If you just keep telling everyone that, as soon as something comes up, they're going to think of you straight away. I think
That's funny because obviously you used to post quite a lot on Instagram, and that's how we first met. And you were like, "I'm buying in sterling. I'm buying in sterling. I'm buying in sterling." I got your number, and it wasn't actually even with me. I knew somebody else that was buying or was selling something in sterling, and I was like, "You go here, the guy will go show you around."
Yep.
And that was from you, just like, "I buy in this area. I buy in this area."
Yeah, it's just about being specific, and I suppose nowadays, and again, it's not planned or anything. It's just I wanted properties in sterling, so you tell people what you want, right? But even nowadays, it's portfolios and blocks of flats, you know. And I'm obviously speaking to clients daily, so I'll just say to them, like, if you've got anything a bit bigger that's maybe too big for you, or you don't really want to buy it, just let us know, because you obviously can get a sourcing fee. I can either take it myself, or maybe another client might want to buy it, and obviously that brings more opportunities. That's kind of portfolios and blocks of flats.
Yeah, because you bought a block from us in sterling.
Yep.
Which was, I mean, you want to talk about that deal?
Yeah. So that was.
Oh, for fuck's sake.
Oh no.
That's so confident saying it as well.
Good idea.
So yeah, that one was probably about 2 years ago now.
Yeah.
So effectively, it came online. Don't know what to say it, but it's been a few years now, so I'm sure I can. Funnily enough, it was with another agent.
We might cut this.
You
we might
cut
cut
it.
this part.
The long story short, obviously spoke to you guys. You guys were able to get a deal done for us.
Okay.
Oh,
yeah,
no.
man. I'm taking baby sips.
I'm taking water.
I saw it coming as well.
I forgot because I couldn't mention their agent, and I was like, threw me off. There's too many things I can't mention. Anyways, so yeah, that was 2024. So came online, and yeah, the reason that was cheap was it was on a long-term lease.
Yep.
The rent was quite low, which kind of devalued the block overall.
It was to the council, wasn't it?
Yes.
Yep.
Yeah. So that was why I was able to get it at a decent price. The seller obviously bought it at probably a better price as well.
And that's, sorry, just on that, so the person that you bought it off had bought it really cheap and
Yep.
they traded it straight onto
Exactly. Yeah.
And
yeah.
you were happy. You knew that you didn't care. You were like, well, I knew the end value.
100%. And I think, I can't remember the exact figures, but they bought the commercials as well.
Yep.
You know, and I think maybe even I paid roughly for the residential what they paid for the whole thing, but they were able to sell commercials off at a big profit,
Yeah.
whereas I was only wanting the residential element. And like some of the best deals I've done has been
Oh, mate. Fucking.
Some of the best transactions that you have done.
Say dick. Just say dick. That's what we did last time.
so yeah, some of the best property transactions that I've done
What a mouthful.
has been from traders. So effectively, it was bought at 980,000. Bought it on a long-term fix because I couldn't really re-leverage it because of the low lease.
Was it under auction terms?
It was under auction terms actually.
But we extended, we gave you 12 weeks.
Yeah,
didn't we?
I got 12 weeks and I managed to complete it after week 10. I can't remember the full deposit, but I remember not sleeping at night, so I think it must have been pretty hefty.
I think it was like 9%. I think it was a slight discount from the 10.
Yeah, so when I bought ones recently, I just remember back then to then I was like, right, I've done it before. But anyways, you're locked in, but then I suppose that's certainty for the seller. So that's why you're able to buy it at a better price.
And was that your biggest deal at that point?
Mate, come
Yes.
You guys are a row.
This is the worst game.
There's nothing in this cup anymore. I'll just pretend.
Thank God it's not alcohol.
It's so much
drunk.
better. So was that the best property transaction that you had made at that date?
Probably one of, yeah. I think also the biggest.
Yeah.
I would say. I think, yeah. So effectively, obviously, you're tying up money for a long period, but I've got a long-term mindset, and effectively, I knew that I'd wait 3 years, wait for the lease to end, and then I could re-leverage because the building on a bricks and mortar basis was worth so much more.
And are the council still the tenants in there?
Yeah,
or-
yeah. So the council are out in 2027,
Okay.
which is next year. So we're 2 years into 3 years. I think the building's probably off about £2 million now.
Okay.
And I bought it for 980,000. So I
Amazing.
only owe 700,000 on it, which I can re-leverage and pull out. I don't know, roughly, £600,000.
You used the term leverage there, and Lewis and myself are kind of risk averse, and we're obviously sat across from someone who has millions, tens of millions of pounds worth of mortgages out. And you say you couldn't sleep at night when you paid that deposit to us, but like, how do you sleep at night knowing how much lending you actually have?
The lending doesn't actually bother me. It's more just day-to-day cash flow issues when you're obviously scaling quite hard, you know. You've got builders, probably weekly build cost is like 70 grand a week. And I'm always short, so you think you're doing well when you hit 50 and then you're still 20 short, and then you know that he's dealing with a lot of stress because he's got builders, guys, materials, all that stuff. So it's probably day to day. In terms of the actual debt, I don't worry too much about it. I'm obviously once I re-leverage once, I'm not kind of leveraging again. Everything's on a 5-year fix. I do try to change the lenders up. Naturally, you use the same lenders because you need to use lenders you get certainty of funds and it works and you know how they work. But effectively, I still try to kind of use as much as possible. So I've maybe split between 4 different lenders. Ideally, it would be 5. So that kind of gives me a bit of peace of mind, you know. 'Cause I think a lot of the problems, not all, but a lot of the problems in the past, especially with debt, has come from people being with one bank, and that one bank's had an issue. And that's been a common thing I've seen throughout in different people's stories. But again, obviously going forward, you expect the market to rise. If the 5-year fix is suddenly coming up, and I think that the market's probably not risen, that's when I'll probably start attacking the debt a little bit. But then also you've built up a cash flow in business. The portfolio is also cash flow money as well.
What would you say the sort of long-term plan is with the portfolio?
I'm honestly not sure. I think just keep buying. I think short term, probably diversify a little bit away from a lot of student stock. I've got a lot of student stuff. It's working greatly. It's printing money, but it's also quite concentrated in that, so it is a risk. So I'd like to diversify the stock, but just keep growing really. I've not really got specific goals. I might get bored in a couple of years, but as long as it's working and it's giving me something to do and I'm enjoying it, then I'll keep buying.
When you say diversify the stock, because we were at a conference the other day and someone was like, I'll buy anything anywhere as long as I can refinance my money out. I've got a free property there. But I know you are a little bit more like, I want to buy decent stock that I'd be happy to hold.
Well, one of my favourite quotes in investing was from Grant Cardone. I think it's the easier it is to buy, the harder it is to sell. And a lot of people go about buying deals because they're easy to buy,
Yeah,
but then they don't really realise.
Pretend you didn't say it.
Oh fuck!
Cut that.
I'm allowed to swear.
Yeah, man. Fuck.
Cheers. I was getting in trouble from my mum though. She listens to them.
Oh, is she?
Can I said a
Sorry,
podcast
you-
yesterday. I was like, because I don't phone her often. I'm in Dubai, and she'll listen to the podcast to hear my voice.
We've obviously talked about bridging, getting off bridge, but something that I didn't know about until obviously I spoke to you in January was vendor financing, which we're currently doing a deal. Oh, fuck. I hate this game. I hate this game. I hate this game. So you're currently buying a property from us and using vendor financing. So explain to the audience what vendor financing.
Yeah, so vendor financing, I mean, it's effectively in the name of it, right? So the vendor is financing you to allow you to buy the property. That can be structured in a plethora of different ways. Probably the easiest and simplest way is if the vendor owns the property cash. They can then obviously effectively give you the keys, but then take first charge security over the title at a given price. So effectively what would happen is they would become the bank. So the deal that we're doing, said it.
Sorry, Ian.
So the property that I'm buying off of you guys.
Yep.
It's going for 125,000.
Yep.
So effectively, there would be a loan from you guys at 125,000. You guys would get first charge security over the property. That then allows me to get into the property
Oh, well done.
without putting any money down. And then obviously, when I refinance, I'm able to pay you guys back.
So you've basically, in simple terms, you've managed to acquire property for free. The person that's given you the property takes a charge on the property. You can then refinance, and out of those funds, you can then pay them for that property.
And where it's quite good, because not all sellers are going to agree to this, right? And especially if you're just new to it, there's probably a less likelihood that someone's going to agree to it as well. But certain people, probably more sophisticated people, there is value in it, and typically you might be able to pay more. Typically, it might be a deal that you wouldn't have done otherwise, and that's
Sorry, Ewan's mum.
and that's where there's value in both sides, right?
Yeah, definitely.
Oh, just to clarify, this is a property you're buying directly from John and I.
Yes.
Don't come to auction trying to do this with our other properties.
Because that was actually the
think you
conversation that
regret
we
saying
had, because you were like, I am interested in this one, but I've got this idea, and I need to speak to sales. I was like, it's one of ours. And you were like, fantastic. That makes it a little bit easier for us.
Yep.
But yeah, if you're, obviously it helps that you know us, and it was like, yes, you wanted to buy it.
It helps that we know you.
And yeah,
Or
correct.
we
Yeah,
trust
yeah.
you.
Yeah. But then it's like, if somebody phoned up and was like speaking to one of our sellers, it's very unlikely that kind of
Property
property transaction is going to be available when we are selling a property for a client. I would say.
Well, just out of interest, Ewan, have you done transactions like this before?
Yeah. So I bought my own house.
Did you?
By doing this, yeah.
Was it your first flat?
No, our house.
Oh, yeah. Okay.
That we live in now. So that was, I don't know, probably, property number 3 that we lived in. That was 2 years ago now. So effectively, my friend's a developer, and he had to sell it very, very fast because he had, I think he'd paid stamp duty on his other house. He'd already bought a mansion, and he had to sell this house, and effectively, if he didn't sell it by a certain date, then he would pay the tax and not get it refunded. So he had to get the house sold within 6 weeks. So basically, we structured it that he basically just gave us the keys, and then I waited 6 months until I got a tax return, and then refinanced them off. So that was great, yeah. So effectively, I bought a house with no money.
So you can do no money deals.
Yeah, exactly. Yeah, on your own house. Yeah, this is years ago. Have I done it since? I'm doing it just now, actually, on a restaurant.
Okay.
Yeah, and effectively, I've took so long to buy it, the seller's offered it.
All right.
Yeah, so that just helps, Yeah. And I suppose one big one, I'm negotiating back and forth with a quite a large portfolio for about a year. I think that at some point they'll be ready to sell. But the first thing they said to me was, "Would you be comfortable if we could loan you the money to buy it?" Because we quite often like to do that. So effectively, they're all cash. But what they'll effectively do, almost as a strategy, is they'll get a higher price, obviously.
Right, okay.
But they'll give a high loan to value to the purchaser, and then they'll take interest. And they've almost got a separate business. They own all their properties cash.
Yep,
They've got a separate business that lends.
That makes sense. And how would you propose this to a seller? What are the benefits to them?
So the main benefit is obviously speed. It can be really, really fast because you're not dealing with too much. But probably the biggest one is often price. So I'll maybe say give a cleaner offer at a lower price. But if I can't quite get to the seller's expectations, and for example, if they own it cash, then effectively I can pay a bit higher. Yeah.
Yeah. What's your main strategy at the moment? Obviously, you said you're buying portfolios, but when you're looking at portfolios, are you looking at capital appreciation, or is it yield, or is it as long as you can get most of your money back out? Or
I think it's probably all of them. I like having my cake and eating it.
I want high yield. I want it to appreciate, and I want to buy it for a penny.
Exactly. And I think that's doable, right? I think that's doable. I mean, it's funny. Even the guy with a large portfolio, I offered him a certain offer, and he came back and said, "I'll give you 2 million quid if you could buy any properties at that price in sterling." So I then went and sent him 50 properties I bought below that price. And then they never got back to me. So in sterling's a market where you've got all of that, you know. So it can work. But I think obviously I was started buying in sterling, got to know the market, quickly found out that I mean, there's only a limited amount of properties there, and obviously you do want to diversify as well. So started buying blocks of flats in Glasgow. I suppose with Glasgow, you're always going to get yield most places, right? And you're hopefully going to get capital growth. Some places more than others, and like there is good deals out there as well. A lot of people say they'll struggle, but there is.
Oh, you said it again. If you've got everything sort of outsourced as much as is possible, is there any reason that you're sticking to certain areas like Stirling, like Glasgow?
I think you just get huge benefits over time. I mean, in Stirling, if you go on to Rightmove now, there's literally no properties, whereas I've got like probably 50 illegals in Stirling. You know what I mean? And that just comes with time because people just sell to you because you're the guy. In terms of going to Glasgow, it's a much bigger market. There's obviously a much more diversified market in terms of workplaces. It's a major city. There's free universities, for example, but it also still yields. And over time, it will take a lot longer, but over time you'll get more relationships and you can build it up.
You have focused on the student market very much in Stirling. Are you focusing on the student market? Because the one you've got in Sauchiehall Street, that's going to be student lets as well, yeah?
Yeah, I wouldn't say necessarily focusing, but I do think right now that's probably where a lot of the opportunity is. I do like the blocks because I'm not dealing with mutuals, and typically they are more kind of student-led properties, be it in the city centre, be it in the West End. But also trying to buy more suburban blocks of flats as well. I've got one going through in the Woodside, which is obviously probably sometimes students, sometimes professionals, so it's a wee bit more balanced. So I wouldn't think necessarily no, but obviously you start where you are, and it has worked to date very, very well, but you're also conscious that you don't want one tenant type, especially when you're starting to get a larger portfolio. You want to diversify the tenant type. Don't worry about that if you've got 4 buy-to-lets, by the way, but when you start getting to like sizable number, that's when you really want to think about that stuff.
Now, when you're buying these portfolios, are you going in a bridge and then financing back off in 6 months? Is that always the strategy?
Always, yeah. And again, it's easy. You know, I'm not messing about with planning. I'm not trying to build something out the ground. I'm not setting up an Instagram page to try flog my hotel. Do you know what I mean? I'm just buying a building. I'm refinancing it. It's what we do anyway for a living. And it's fairly passive. In terms of the bridging, 9 times out of 10, yeah, you're just buying straight on a bridge. For example, the one that I bought off you guys, that was longer term. You know, I didn't want to be on a 3-year bridge, although they did get offered one, but I'd much rather just be in the 5-year fix. And then obviously, if I wanted my money sooner, I can obviously pay exit fees. So typically, you're buying on a bridge, either doing a refurb or not doing a refurb if you're buying at discount and then refinancing day one. So you might even, you obviously said 6 months, usually we're out these deals in 10 weeks.
It's a deal, yeah. So you have over 150 properties, and that's a lot of properties to manage. So do you have someone that just is constantly replying to letting agents? Because I know that, I mean, we're just like, oh, there's another email from the letting agent about something broken and something that. I mean, do you use multiple letting agents or?
I largely use one.
Okay.
But sometimes if you buy properties off certain agents, they want the management back, and that's obviously business. But probably the main thing is I don't get emails.
Okay.
They just deal with it.
All right. So have you given them a float and said, look, there's money to deal with any issues, or?
Not officially, they just deal with it. Yeah, I mean, just to elaborate, genuinely, their job is to give me as least hassle as possible. Do you know what I mean? So they don't actually they're doing their job by not emailing me. You know?
said to me that your goal is to not have an email. Is that still a thing? Have you achieved your goal?
I can't remember saying that, but it sounds like something I would say, yeah. So I'm sure I did. Look, it's obviously difficult if you're in financial services, right? But I do know other people, other business owners that don't have an email, and I'm pretty jealous of them. Business owners that don't have a laptop, you know, which is hard to believe when you're glued to your laptop 10 hours a day. But I suppose just going back, and suppose in terms of the letting agents, obviously there's a lot of trust there. Don't get us wrong, a huge amount of trust. There's obviously volume as well, so they've got a relationship to manage. But effectively, their job is to not bring me the bad news and to deal with it, you know. And a lot of the time, it might be a case of, same with the builder as well. I don't hear half the stuff that goes on, but it's more 4 weeks later when he's fixed it and you're having a meal and he's like, oh, by the way, you would never believe what I had to deal with 4 weeks ago. Like crazy stuff. Do you know what I mean? We've had dead people in flats, we've had tarantulas in flats, we've had blocks of flats falling down. But again,
That's like the
it's just mad stuff.
Blocks of flats falling down.
Yeah.
Let's dig into that. Is this part of the why it's costing you £50,000 a week to do your properties up?
Partly. Yeah, partly, yeah. So that specific one, small block of flats in Stirling, again, I bought it on an AVM, right? So there's no one checking it, although I don't think you would have necessarily seen this. But effectively, once we got into one of the flats, the wall at the back was kind of falling in to the flat. I didn't fully understand it. But obviously I've seen some pictures on WhatsApps and stuff like that, so you can kind of guess. But all I know is it took the builder like 5 or 6 guys to actually do the job. You know, a lot of people just declining the job and eventually got it fixed. So that's the kind of stuff. But ultimately, there's no point in him telling me, because I'm a fucking mortgage broker. Do you know what I mean? I'm sitting processing mortgages, pushing paper with my pen, with my laptop. There's not really any value I can add to a wall that I've never seen. Like, really isn't. So he knows that, and obviously it's his job to just solve the problem. And effectively, we can have a laugh about it 4 weeks later.
Yeah.
You know.
Well, I think that comes to you working with fewer people that you trust and giving them a lot of volume,
Yep.
and that's probably how you can develop those relationships. Okay, so let's talk about as an investor and as a business owner, because you obviously built a really successful business. As an investor, what's one piece of advice you would give yourself 10 years ago on how to get to where you are quicker?
Just get started sooner and buy good stock.
What's good stock?
Good stock is obviously different to everyone, but I think you want stock that yields. I think ideally you want stock that you could easily sell in places where people want to live, so you can easily let it. I suppose we're sitting in Glasgow now. I mean, a lot of stuff here, let's say, I don't know, 80, 90, £100,000 or above. That kind of stuff's quite good because it still yields. You've got full access to lenders and you can usually sell it as well. So I would and I'll also get started sooner. You know, even when I say waited 3 years to save up enough money to buy cash, which kind of makes sense from a strategy point of view. In hindsight, if I just bought properties at market value, each time I got £20,000 or £25,000, the amount the properties went up in value in that period, I would have probably made more money.
Yep. As a business owner,
Okay.
when we have chats
Yep.
about business, you're always like, "Oh, I don't really know what I'm doing." No. You've built a fucking massive business and it's doing really well.
Yep.
So if you were to take off your humble hat and you were to give us some advice, what would you say to someone else that's maybe looking to start in a business?
I would just say focus on one thing and just try to become the best at it. You know, because we're obviously still figuring out mortgages and probably one of the largest, if not the largest in the country at what we do. But you are still figuring it out and you're learning every single day. So yeah, I would just pick something you think you might have some sort of interest in, some sort of skill set, experience at, and then just try to become the best at it. And then probably look to kind of hire as well, probably slightly quicker, and try to get good people. Easier said than done. In hindsight, I got quite lucky with the people I brought in early days. But ultimately, you can...
That seems to be a recurring theme in everything you do. So I don't think it's luck.
Make your own luck.
Perhaps.
Where would you say that comes from? How is it you find people that are really good?
I suppose it's probably taking chances. Yeah, I've taken chances. Ideally, you've got some sort of experience with them previously. So I think probably my first 3 hires, you had experience dealing with them. One was my partner, Michu. The other one used to work in an estate agency, so I used to buy a lot of property off of him. And I suppose the other one was a client. But importantly, as all his documents were perfect, everything's back. Because you get a lot of clients and they say, "Oh, are you looking to employ him? Have you got a job?" and stuff like that. But then ultimately, people don't really know what the reality is. And the reality is you're 10 hours, you're 12 hours a day, you're processing paperwork, you're arguing with underwriters. It's really not that fun, if that makes sense. And if you're somebody that, do you know what I mean? If you're getting asked for a passport and you're taking a picture and there's a can of beer beside it and stuff like that for your AML, then perhaps you're not the best person.
You see some of the pictures we get for AML. Fucking
but on the flip side, you do have admins that can support with that. But yeah, I would say the first 3 people, you kind of dealt with them on a professional or personal aspect.
I guess like just keeping an eye out for talent when you come across them.
Yes. Yeah, for sure. And that's in everything you do in terms of personal, family, networking, you know.
And obviously, you said you didn't really have an end goal for the properties. You're just going to keep buying. I mean, do you have an end goal for the mortgage company, or are you just try and write as many mortgages as possible every single month?
Yeah, I think try write as many as possible, but you also don't want to break it, you know, because I mean, so it's not just volume for the sake of it. Effectively, it's really about doing a good job for clients. Most of our business is built off referrals. We don't really do much marketing, although I've got an Instagram page. But I think with the mortgages, it's really just about getting to the next stage. I suppose right now we're really looking for maybe 1 or 2 or maybe even 3 staff members to get to the next stage again. That will allow us to grow, restructure, and then go again.
Yep.
So it's not thinking maybe 2, 3, 4, 5 years ahead. It's really thinking about how they get to the next stage.
Yeah. No matter how long, even if you do it in a month. It's
Exactly.
like, what does it take rather than 3 years? There's quite a few people that are in property that have gone into mortgages as well.
Mm-hmm.
So what advice would you give them to scale that business?
It's hard to say, really. I think just do a good job by your client. I just think it is service led, and you do really need to know what you're talking about. If you're coming from a property background, you've obviously got a head start, which massively helps. So I think that knowledge, coupled with obviously what you'll learn when you're actually doing the mortgages, is obviously will allow you to provide a good service and grow. But it's really a lot of the time with mortgages, it's about pushing back. It's about really, really knowing your stuff. I mean, there's even certain scenarios, for example, that we've had where maybe one of your staff members has dealt with a situation differently and better, and they've managed to get a mortgage through versus, say, another team member's done or I've done, and you're always learning every day. So I would just get started and get stuck into it, yeah.
What does that come down to? Knowing how to get mortgages across? Is it knowing what the specific lender?
Yeah, I mean, a lot of it comes down to packaging, and it's about how you position stuff to lenders. Yeah, that's the main thing, and it's not necessarily what lenders tell you what they want. They often don't, but it's really ascertaining what exactly are they wanting, and then obviously providing that, and sometimes providing that and more, so you don't get any more questions in the follow up. I think the other main thing as well is using the right lenders. Because you can get bogged down just by saving 1 or 2 bips on your mortgage, and it's just all you're gonna do is take 4, 5, 6 months. You're gonna lose all these deals that you could have bought otherwise. You're gonna lose a few hairs as well.
I think it's the longest we've gone without saying the word deal.
Yeah, that well.
Obviously, you deal with one of the maddest bastards in the property industry, Mr. Chris Dale.
Yeah.
How busy does he keep you?
It keeps us very busy. Yeah. He's probably one of our biggest clients, if not the biggest. He might not be the biggest, believe it or not. So
he's biggest in stature.
He could be the biggest in stature, but I think he might be second in terms of mortgages. So there is I won't name him, but there is a crazier bastard than him potentially. But yeah, Chris keeps us busy. Obviously not just with the mortgages, but also with the 15 or 20 WhatsApp messages every single day to every single one of your members of staff as well. But it's good fun.
That's a good insight as well, just to how he works. If he's messaging you, he's also messaging all your staff, and that's why he does get so many opportunities in the market, because he's on people
for sure
to getting stuff done.
Yeah, I mean, he's absolutely harassing people. Obviously, sometimes it works better than others. It might work better for a property sourcer versus a solicitor. And that's we did have a transaction that was a wee bit delayed because his lawyer was messing about. So he went and showed me a screenshot of about 15 unresponded to WhatsApps, and I just thought, oh God, he's up against it,
I think we did a transaction with him. He was buying through us, and I think the seller solicitor was delaying things a wee bit.
I think they were inept.
And at the end of the transaction, Chris sent them an email and copied us all in, telling them how incompetent they were and how he was never going to deal with them again and recommend them. So that was good fun, that transaction.
Yeah. No, there's never a dull day. And like, yeah, there's a fair bit there, and it's always good fun getting them through. Yeah.
Maybe if this series continues, we'll maybe get Chris on.
So Ewan, are you taking on new clients just now? And how can people reach out to you?
Yeah, absolutely. Yeah. So always looking to grow, always looking to take on new clients in the business. Obviously, there's myself and 6 or 7 others just now. So we've got a good team to look after everybody. In terms of getting in touch, I'm mostly on Instagram. So Ewan Dudding Property Finance. You also see EKD Finance on Instagram as well, which is the company name. You can also go to our website as well and inquire. And then either myself or one of my colleagues will be in touch.
Excellent. Well, thank you very much for coming on the podcast today. Thank you for letting us do as much shots of Ginger as we have ever done in this podcast. So congratulations. And as always, guys, if you have enjoyed this podcast, please make sure to share, leave us a comment. If you haven't enjoyed it, leave us some hate. Why not? And get hammered.